Hello, everybody, and welcome to Commodity Culture, where our goal is to make you a better investor in the commodity space. My name is Jesse Day. As always, before we dive in, standard disclaimer, nothing here is investment advice. Do your own due diligence. And today's guest is the CEO of UR Energy, a uranium mining company operating the Lost Creek in situ recovery uranium facility in south central Wyoming. It's John Cash. Great to have you on the show again.
Hey, thanks a lot, Jesse. It's good to be on. Certainly a lot to talk about these days in the nuclear space.
There certainly is, and it's been a while since I had you on last. There's a lot to catch up on. So let's just start with your overall view on the uranium sector at present. What are the main themes and trends you're currently paying attention to when it comes to uranium?
Wow, where do we start? There's so much going on right now. It seems like once or twice a week we get major news from around the world in our space. So, I mean, we can talk about geopolitics. That's really a driver right now with risk and market price. We can talk about the Department of Energy and their LEU and HALEU RFPs that are out. That could affect the market, especially for U.S. producers. We can talk about new builds, 3 Mile Island coming on. There's so many things we're watching right now. It's a full-time job just to keep up with news in the industry. In fact, I find it hard to keep up with everything that's going on. News out of Kazakhstan, Kazatomprom, news with Cameco, their commentary on Kazakhstan. So, yeah, just so many things we're watching right now. Also going to industry meetings, the World Nuclear Association meeting in London. Great conference. We had a chance to meet with a number of utilities there, customers and potential customers. Learned a lot there. Small modular reactors. I keep learning more and more about them, the potential impact they're going to have. So, yeah, just unending the good news. So many tailwinds in the industry right now, and so much to watch and to talk about.
Completely agree with you. And I do want to touch on Kazakhstan here because a lot of people are aware that Kazatomprom has lowered their production guidance, which did send the equities up sharply on that news. Now, what a lot of people aren't paying attention to, though, is that now Kazatomprom is saying it could be too costly to export uranium to Western countries due to sanctions affecting shipping routes through Russia. I want to read a quote from an article on news.az. It says, Kazakhstan may redirect its uranium from the European market since transportation has become much more expensive due to sanctions against Russia, said Mirzan Yusupov, the head of Kazatomprom. If this does come to pass, there will be a greater shortage of uranium supply in the West than most anticipated, considering Kazatomprom is plus 25% of the world's supply, I believe. Kazakhstan in general being around that percentage. It obviously makes projects like yours more essential to energy security for the United States as well. What are your thoughts on these comments from Kazatomprom?
Yeah, Jesse, for probably since 2018, we've been saying watch Russia, but more importantly, watch Kazakhstan. What happens there? That really drives the market globally because they are the number one producer. They're our number one competitor when it comes to actually mined uranium, not Russia. Russia is a processor more than a miner. So, yeah, for a long, long time, we've been saying this is the big one. This is the big issue to watch. Yes, the Russian ban on uranium imports are in the form of LEU. That's important. That's a market driver and adds risk. But the big shoe to drop here would be Kazatomprom. And if they have an inability to ship to the West, those pounds are still going to get produced. They're simply going to get used in the former Soviet states. They're going to get used in China, and they're not going to make it to the West. So I think what we're seeing here is the beginning of the formation of a bifurcated market, East versus West. We'll see how that continues to evolve. That's based on a lot of geopolitics, obviously what happens in the war between Russia and Ukraine. But even if that is resolved in short order, we're not going to be on friendly terms with Russia overnight. That's going to take time to heal those wounds. And so nothing's going to change there on the geopolitics overnight. I suspect sanctions would stay in place. Shipping would still be very problematic for Kazakhstan. And I mean, let's face it, China is building out their reactor fleet at a breakneck speed. An immense number of reactors to come online there in the next 10, 20 years. And so that's going to put tremendous demand on the supply coming out of Kazakhstan. Kazakhstan's right there between China and Russia, and they are the natural buyers of that material. The routes are already established into those nations. So, yeah, a lot to watch there. But if we do continue to see a bifurcated market, I think that's going to put a lot more pressure on the Western producers, including ourselves, to be able to backfill that gap. And I'll be real honest, it's going to be very difficult for Western producers to backfill that supply. We simply don't have the mines up and running. We don't have enough permits and licenses, not enough greenfield projects, not enough exploration, not enough people. So it's going to take a while for Western miners to react to that. Whether you look at Australia, Canada, or the U.S., these things take time. Just ask any of the big producers, ask any of us smaller producers. Permitting takes years, construction can take years. So, yeah, the ability to respond to these interruptions from Kazakhstan and potentially Uzbekistan as well can be real game changers for our industry.
And you mentioned 3 Mile Island at the beginning of our conversation. This is obviously another big piece of news. Is a deal was made with Microsoft to power AI data centers through a reactor on 3 Mile Island. What's your reaction? And obviously, the AI trend, there's differing opinions on this. Obviously, this is a new technology. It is the wave of the future, much like the internet was in the 90s. How do you see nuclear energy playing a role when it comes to AI data centers moving forward? And what's your reaction to this news about the deal with Microsoft?
Oh, it's fantastic news. And I think that's really one of the takeaways we had from London and also from the meeting in Atlanta earlier this year. We talked with a number of the major utilities, really serious people. They have their finger on the pulse of energy demand, probably better than anybody on the planet. And they were all indicating AI is coming, big data is coming, and it's going to drive the electricity market in the US and globally. So it's not surprising to see that news where Microsoft is taking down a major supply contract with Constellation and resulting in the potential reopening of 3 Mile Island. 2 years ago, if you had told me that 3 Mile Island will be reopening, I would have said you're absolutely nuts. That's not going to happen. But it's a perfect illustration of the energy demand from big data centers and AI, and it's resulting in the restart of that facility. And the numbers are staggering that we're hearing from the IEA. They're projecting up to a need for maybe as much as 600 terawatts of new electricity globally by 2030 for big data centers. If you look at the energy requirement for just a simple online search for data, an AI search takes 10 times more electricity than a standard Google search. Within a few years, we're thinking that the energy demand in the US will be about 9% driven by big data. 9% of our electricity going into big data. Those are staggering numbers. And how do you get there? It's difficult because those data centers, they need to be up and running 24/7, 365. They can't tolerate downtime because their customers won't tolerate downtime. So while they love the carbon-free story, they have a hard time relying on renewables because the sun goes down every night and the wind doesn't always blow. So they are looking for that stable, consistent base load, carbon-free energy. You've really got two sources there. You've got hydro, which we pretty much have put dams on everything we can put dams on, or you've got nuclear. So they are making a strong move toward nuclear. So really probably the first shot across the bow on this, and should have been an eye-opener for us, was when Bill Gates formed TerraPower, and they're building out the small modular reactor right now in Wyoming. I mean, he's the guy. If he can get it done, get that reactor up and running, produce that carbon-free electricity, and really start to open the door there for small modular reactors. So it's fantastic news for the industry, and it's going to be a driver of electricity generation for decades to come, for the foreseeable future.
India is a country that comes up a lot when discussing emerging markets. I know there's a lot of investors who are very bullish on the future of the Indian economy, and now they're planning to build 40 to 50 small nuclear reactors to power industrial production. They also have plans to produce 100 gigawatts of nuclear energy by 2047, with nuclear capacity projected to expand from 8,000 megawatts at present to 22,000 megawatts by 2031. like you said at the opening, these sorts of stories are just cropping up everywhere. The trend for nuclear continues to pick up steam internationally. How do you think this story out of India could, and basically all over the world, these nuclear build outs, extensions, how do you think this will affect the supply demand dynamics for uranium?
It'll start off a little bit slow on the demand, but I think it's going to grow rapidly. One of the things that we took away from London, from the utilities that we spoke with, is small modular reactors are coming, and they're coming really fast. I've always been a bit more conservative. I thought, maybe by 2030s, 2035, we would begin to see demand for fuel. We've got the HALEU problem, and we talked to the utilities in London about that. But I was corrected on the HALEU issue. They said, no, HALEU is not an issue until the mid 2030s. The first small modular reactors really are probably going to burn enrichment plus, or U plus, which is a 6% enrichment. We're talking about the Westinghouse reactor, for example. They've downsized to 300 megawatt. That burns uranium plus. So HALEU is not an issue. So we don't have a supply chain problem yet for small modular reactors. That's not inhibiting their growth. And the utilities we talked to said, hey, look, we're seeing fuel demand coming for small modulars in the very near term, 2027, 2028. We intend to start buying fuel for small modular reactors. So they're probably 5 to 7 years in advance of what I was thinking, but it's coming very quickly. And it's not just India. I mean, it's all over the world that countries are looking to build out not just conventional reactors, but small modulars. And it's not even just new builds, it's power uprates here in the US, creating additional demand. I think Germany's doing a lot of soul searching right now about bringing their reactors back online. There's news out of Australia just a few days ago that they're looking at building out reactors there. I mean, they've had a moratorium, but they realize that with big data, if they're going to participate there with the rest of the world, they have to have a reliable supply of energy, and they're looking at nuclear. Spain, I think they're reconsidering their ban, their pending ban on nuclear power. And we could go on and on and on of countries that are doing new builds, of course, being led by China. So, yeah, Jesse, I think the SMRs, they're coming. They're coming much quicker than we thought. And yeah, the demand is not going to be great up front, but it will develop very rapidly. I think by the mid 2030s, we'll see significant demand from that sector.
Well, let's discuss how UR Energy fits into the picture. You've been on once before. It's been a while, though. So for those tuning in for the first time, could you start with an overview of the company?
Yeah, so we formed in 2004 as a Canadian company. We're still Canadian, but most of our people are U.S. citizens. Our operations are all in the U.S. But after 2004, when we developed, by 2005, we began acquiring properties in the U.S. that included our Lost Creek and Lost Soldier properties. We did some drilling and very quickly realized that, hey, Lost Creek and Lost Soldier looked like good projects. And we began permitting Lost Creek first. Got it permitted by 2012. By August of 2013, we were in production. Had a number of really good years of production there. As the market declined, we ultimately ran out of long-term contracts by late 2020. So we had slowed production down. But 2 years ago, as the market began to return, we were back in the money. We began signing long-term contracts again, and that gave us the faith we needed to ramp production back up at Lost Creek. We now have 6 long-term contracts in place with global nuclear companies. Also, in that interim time period, we acquired the Shirley Basin project from Areva NC. That was in December 2013. We immediately began permitting that facility, and it's now fully licensed, fully permitted. And earlier this year, we began construction to build out a satellite plant there to feed uranium there to our Lost Creek plant for production. Should point out that we really focus on in situ mining. Our focus is not conventional uranium. We stick to in situ. That's our expertise. So we hope to have Shirley Basin constructed, ready for production late 2025. The license capacity at Shirley is 1 million pounds per year, and the license capacity at our Lost Creek project is 1.2 million pounds per year. So that takes us up to a capacity of 2.2 million pounds per year. We're not the biggest company out there, But certainly, we believe we're certainly in the lower half cost of production globally because of the in situ technology and the good quality of the ore bodies. So, always looking for room to grow. We've got some exploration properties we're working on. We're also taking a hard look at our Lost Soldier asset to see where it's going to fit into the production portfolio, and hope to have more news on that in the coming months. Don't know if that'll be a go decision on production or not, but we're certainly taking a hard look at it. So, yeah, that's where we are, Jesse. Just ramping up production and trying to grow the portfolio and really focused on quality projects. I like to say that we're a value company. We don't go out and buy a lot of assets just for marketing value. We really focus on mining and the economics around that mining. So that's who we are at UR Energy. That's what we do.
And you've been producing and selling uranium for a number of years now. I think this is something overlooked by a lot of market participants. There's actually very few producing uranium companies on the planet right now. You are one of the few who are. I think part of the reason it's getting overlooked is because it's a smaller production profile compared to majors like Cameco, but you are planning to ramp up, as you mentioned. So talk to us about that timeline, and how soon do you think we could see more meaningful commercial scale production?
Yeah, so we continue to ramp up production at Lost Creek. Uh, we had been targeting 570,000 pounds of production because that's our contract book for this year. We put out a press release. We're not going to get there. It's going to be below that just because of ramp up challenges. But would like to point out, month over month over month, we keep increasing production, just going a little bit slower than we want because of a variety of issues, but really driven by manpower. In this industry, it's atrophied for so many years because of so many down years in the market. So a lot of geologists and engineers have retired, moved away out of state, and just moved to other industries. So we're effectively rebuilding that industry right now. But our contract book continues to grow, and we want to grow our production along with that contract book. Next year, our contract book is 730,000 pounds, and then the year after, we go above 900,000 pounds. By then, we'll have our Shirley Basin project online. And again, it's got a license capacity of 1 million pounds per year. So we're not forecasting yet what our production rates are going to be, but we're going to ramp that up as quickly as we can and try to get maximum production from both Lost Creek and from Shirley Basin. That's important for economic reasons, not just fulfilling contractual obligations, but there are a lot of fixed costs in any type of mining, and especially in situ mining. So the more we can produce, the cheaper we produce it. So reaching those economies of scale and moving even beyond those to really drive down cost, that is our goal. So by the end of 2026, we really hope to have Shirley Basin up and running and completely ramped up. And well before then, we expect to have Lost Creek fully ramped up. Lost Creek's been a great producer for a number of years. I mean, we've produced about 800,000 pounds per year back in 2015, and we're confident we can get back to that and even exceed that going forward.
I just want to follow up there regarding the manpower in the industry, because this is a sentiment I've heard echoed from several CEOs and people in the space. How big of a challenge is that to find qualified personnel? And could you just provide some more color on how you're addressing that issue and kind of rebuilding that aspect of the industry, as you mentioned?
Yeah, sure. We have to recognize that in situ mining is unique. There are no college degrees on in situ mining or uranium geology. There's no engineering program at any university that really teaches in situ mining. So, what we have to do as an industry, as we rebuild, we've already gone back and we've rehired pretty much everybody that has any experience. So, to continue to build, essentially, what we have to do, not just us, but our peers around the world, is we have to go get bright, talented people from other industries or right out of school. Literally just a couple of days ago, I was at a career fair at my alma mater. Had talked to young engineers, young geologists about joining the industry. But we've got to get those people, but it takes time once we have them to train them because they know very little about the technology that we're deploying. So we have to focus on getting really bright people, and then we train them. We say that our geologists, it takes about a year to get them trained up to the point that we can turn them loose and they can work on their own. Engineers is probably about that same amount of time. So it's not just a switch that you flip on and off and say, yeah, let's get some people and put them to work. Once you get those people, it takes time. The same is true for our hourly staff. We've got some great people at Lost Creek, but we've just got to get them trained up. And it takes time to understand the process, the safety of the procedures, how to manage upset conditions, all of those things. It just simply takes time. So we have to focus on getting those people. We also have to focus on retaining them. Once they join us, we have to create that great work environment where they enjoy coming to work every day and they don't leave us. And we have to reward them for that. So it's challenging. Right now, the unemployment rate in Wyoming is around 3%. Once you get to that level, it effectively means that everybody who wants to work is working. So it's quite competitive right now. We compete with oil and gas, other mining companies. We have a gas field just to our south that's been ramping up. We've lost some people to them over the years. So, yeah, it presents a significant challenge to us. The great news is we have the people we need now. Turnover rates are getting better and better and better. So we're retaining staff for a longer period of time. So we're definitely moving in the right direction. Our next mine at Shirley Basin, fortunately, it's much, much closer to town, to a major city in Wyoming. So we think recruiting and retention will be a lot easier there. It's also a satellite facility, so we don't need nearly as many people. But nonetheless, it's going to present challenges. So I think right now in our industry, manpower is probably the number one challenge that we face.
Yeah, really appreciate that breakdown. I think that's a good segue to talking about the team that you do have in place and how you plan to leverage their expertise and experience to meet your production goals. And let's start with yourself and your backgrounds, and how you became CEO of UR Energy.
Yeah, no, Jesse, I'm a geologist by training. Went to the University of Missouri at Rolla, got undergrad and master's degree in geology, geophysics. During that time period, I worked for a couple of the majors doing uranium exploration in the U.S. But after college, I worked for BHP doing uranium, copper, gold exploration. Then moved on to Rio Algam, did exploration work for them. They held the Smith Ranch project at the time, so I worked there. Then transitioned into regulatory affairs. I went to the dark side and left geology. Did regulatory affairs for a number of years. Cameco ultimately ended up acquiring Smith Ranch. And when they made that acquisition, they asked me to go over to Nebraska to work over there. So I did that and was responsible for operations for a few years there. And actually, 17 years ago, 17 years and about 3 days ago, I got a call from UR Energy, and they asked if I'd be willing to come back to Wyoming to help start up production at Lost Creek. And I had never built out a new mine, and that sounded pretty exciting to be able to do that. So I made the jump to UR Energy, and it's been a great run with them. Started off doing regulatory affairs, permitted the Lost Creek and the Shirley Basin mines, and helped build out Lost Creek. And now we're excited to be building out Shirley Basin. But yeah, I've been sitting in the CEO position here now for, well, going on 3 years now. It won't be long, it'll be 3 years. So it's been a great run. Definitely is a great time to sit in this role with all the tailwinds we've got behind us. But Jesse, we've got a great team. A lot of experience at our senior level with our executive team. For example, Steve Hatton, he's our chief operating officer. He's been mining uranium longer than I have, I think for about 35 years. He's been putting pounds in the can. It's Highland, Smith Ranch. He's did a lot of the construction of those facilities. So a very deep knowledge of the industry. And our other executives like Ryan Sharman, he's got a number of years of experience. He is actually responsible for setting up the agreement state program for the state of Wyoming. So Wyoming could take over the regulation of uranium mining and nuclear programs. And so he's got a great reputation throughout the Western U.S., and he's been a strong addition to our team. And then our chief financial officer and our general counsel, both of them have many, many years of experience in mining. They each have about 17, 18 years of experience in uranium mining. So that's really the tip of the spear for our company, is that very senior management that's been there and done that. We've all put a lot of pounds in the can, and that lends itself to great ramp up at Lost Creek and at Shirley Basin. So without that team, it would be even more difficult to build out a company. So we're really thankful and blessed to have the team that we have.
Well, to end things, I'll open the floor to you and ask, is there anything we haven't yet covered about UR Energy that you think it's important for potential shareholders to know?
Yeah, no, absolutely. I think one of the things I'd like to key on is that right now I think we're tremendously undervalued compared to our peers. We are a proven producer. We've been producing for over 10 years at Lost Creek. Shirley Basin, likewise, that was probably the first in situ uranium mine in the world and was quite successful as a pilot project. So we're very excited to take in situ back there. But we're a proven producer. I think our share price is tremendously undervalued right now, perhaps because we're a smaller company. But as we get into the first quarter of next year and as we continue to ramp up, we expect to be seeing some good profits. I would encourage the viewers to take a look at our technical reports that we put out in March of this year. They were attached to our annual report, full-blown economics on Lost Creek and Shirley Basin. And it's interesting for us, since we're in production, and we have been for a long time, the numbers, the costs that we put into the tech report, they're real numbers. We're not estimating electricity cost or labor cost or chemical cost. Those are real numbers that we're putting in. So we think the error bar on those is very, very small going forward. So yeah, take a look at those. Hopefully you agree with me that we're undervalued right now, or the investors listening agree with that thesis and they jump in. I think the share price is very low right now, and we've got a lot of room to run. So please check us out.
Great. Well, I'll put a link in the description to the UR Energy website, as well as social media for people who want to follow the company. John, thank you once again for coming on the show and sharing your knowledge with the audience.
Yeah, thank you, Jesse. It's been fun.
Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.